Hi, on this video I want to talk about inflation, commodity, and the falling dollar. As for inflation, there's not really anything we could do because let me see, we have China, India, the two most populated country in the world that's growing above 9% for 40 years in a row. And then we have smaller Southeastern Asian country like Vietnam, Cambodia, Malaysia, Indonesia, and then we have Russia. Russia is a big country, and the South America market also growing at a rapid speed. With all those countries growing, and with the current marketplace where U.S. already consume a lot of stuff, we have Western Europe, where everybody growing, and and with the older countries substanding their current consumption, inflation will have to go up. The inflation is fueled by a world growth, so there's really nothing we could stop this. And I don't really see, there's anything we could do. The commodity will continue to go up. Steel, aluminum, wheat, soy, oil will continue to go up because supply and demand. There's not enough supply and a tons of demand. As far as the falling dollar, the currency, the strength of a currency doesn't really directly relate to the interest rate. Yes, there is a correlation, but not entirely. Let's say if like Vietnam has a very high interest rate, or let's say China has a high interest rate, their currency might be strong, but it's not based on their interest rate. Like Vietnam currency is not strong, but they have they have a high interest rate. But China, their currency is extremely strong, but their interest rate is also high. So the two have similarities, but the currency strength is not directly related to the interest rate. In the case of US, our currency is weak because our economy is weak. When a currency is wanted by many other countries, that currency is most likely to be strong, and the economy in that country is likely to be strong. When nobody wants the currency, it gets cheap. And on top of the US economy, the US is a credit economy. People borrow money to buy stuff. The government borrow money to buy stuff. We're borrowing money and printing money to pay for Social Security and healthcare in the next 10 years, and it's gonna be a lot of money we need to print. So with all those things going, and we don't have a strong economy going, of course nobody wants the dollar. And for all of you that travel in the recent month, you'll know what I mean. The dollar is worth less and less and less each week. I mean, Jesus, like my dollar was able to get me let me see, like 35 NT Taiwan dollars just about like a week ago, and this week I could only get like 31 NT dollars. And NT dollar, the Taiwan NT dollar is a weak currency. I'm not even talking about the Chinese currency. I mean, the Chinese currency, it went from $1 to 10 RMB to right now it's like 1 to 7. You know what I mean? We just lost 30% of our value. It's okay if you're staying, if you stay in America, but if you travel, you're gonna feel it. You're gonna feel it hard. And even if you stay in America, inflation is gonna make our currency weak. And the Chinese economy is changing from an exporting economy, slowly growing into a consuming economy like the US. There's gonna be a balance. It's not gonna be like us, where 2/3 of our GDP is based on buying, not selling. China is all selling for now, but when they switch to buying, their currency is gonna go up, and the goods that's made in China is gonna be made in China more expensive now. And guess who's gonna buy it? Americans gonna buy it. So we're gonna import the inflation from China, plus the inflation in the US and the world and our weak economy and weak currency, I mean, we're just really getting screwed. So, I mean, the US economy really needs to do something to control, not to control, to grow our market, to get the confidence from the world that US will still be a powerful country and our currency is worth something. As far as commodity, that's market that's going to keep growing for the next, I don't know, maybe 10 years or more. So, I mean, if you invest in commodity stocks are very good, but you probably want to go for mutual funds because the commodity is not something easy to trade. It's better if you do it for long-term investing. Yeah, man, and the world is definitely harder to navigate in than it was like 5-6 years ago. So that's my little um, fact finding and sharing on this video. Thank you for watching.